Inflation keeps coming in above expectations, so we need to talk about why and if you should be concerned about it. Inflation comes in higher than expected for fourth straight months. Inflation is worse than anticipated in February, even as underlying metrics show signs of progress in the war against price increases. Annual inflation was 3.2% last month, according to the Labor Department's Consumer Price Index, worse than consensus economists' estimates of 3.1%, where it stood in January. It's the fourth consecutive month that inflation was in above economic expectations. Core inflation, which excludes oft-erratic food and energy sub-indexes, checked in at 3.8%, above forecasts of 3.7%, and declining from January's surprise increase. So even as it's coming in above expectations, it's not coming in super far above expectations, and on average, inflation is actually improving. That doesn't mean prices are going down, that means they are going up at a slower rate. As you can see from this article from CNBC, consumer prices rose 0.4% and 3.2% from a year ago, and this is where we were in January 2021, when inflation was going just absolutely nuts. We were getting as high as 1.2% increases in prices in a single month. But now, I don't know why there's no info for July, but now as you can see, basically from 2022 onward, halfway through 2022 onward, we're seeing much lower increases in price, except for the past couple months where we have seen a spike from about 0.1% in October to about 0.4% where we are now. These numbers are based off of the government's U.S. Consumer Price Index, which is what's called a basket of goods, which is basically an assumption that most people buy one of any of these 8 items in any given month. And so the government will take thousands of surveys from stores and other businesses, and they will see how much on average this basket of food costs, and they will be able to estimate from last month to this month, or last year to this year, or last decade to this decade, how much these have increased. And the government tracks that because this is important information for businesses and people and economists and just everybody to know about. So we know that prices are going up. The real question is, why are prices going up? And a lot of you watching this video will probably say something along the lines of corporate greed. They're making more money than ever. And that would be something that CNBC actually backs you up on. Why are prices still so high? Corporate greed, some say. While supply chain problems and high demand may have helped spur inflation early in the pandemic, Rosalino says, Rosalino is a local store owner and that they interviewed. Rosalino believes there's another key reason why prices have soared and remained high: corporate greed. Many CEOs are stating that profits are up as a result of rising prices, Rosalino said, 51, who lives in Maine and about half an hour from Portland. It's definitely a driving force. Greed. It's corporate greed. Now, I'm not going to entirely argue that point. It is a distinct possibility that corporate greed is playing some part in prices continuing to rise, but it's probably not playing as much of a part as you probably think. Inflation ticked up in February, reversing some prior progress. And this article gets into the specifics of what specifically has gotten more expensive. Food prices rose 2.2% since the previous year, which is actually below the 3.2%, trailing the overall inflation rate, and energy prices fell compared to a year earlier. BLS data showed, that's the Bureau of Labor Statistics. Housing prices, and this is the important part, however, came in nearly double the overall inflation, rising 5.7% over that period. Offering a sign of good news, the prices for many grocery staples have moderated. The prices of biscuits and muffins have risen just 1.1% over the past year, while the price of bread has risen just 1.5%. So what this article is saying is that, yeah, food prices are up, but they are up a very small amount relative to the other things in the Consumer Price Index that are up, specifically housing, which has risen a tremendous amount. And we can actually verify this claim from the ABC News article by looking at what's called the U.S. Census Bureau's quarterly financial report. And this is a report that the government puts out, I think maybe every quarter, and it, quote, provides estimated statements of income, retained earnings, balance sheets, and related financial and operating ratios for corporations and retail trade with assets of over $50 million or more. Basically, it's a way to see how much retail stores are making and retaining and how well retail economy is doing in general. And this is important for the government because they need to be able to track the effect of policies that they're implementing. So they have to gather tons of data, including very specifically the sales and profits of retail stores. And what we can do is we can actually look at this graph and see what their sales growth is like. And as you would imagine, it goes up and down. By the way, this is for basically all retail stores over $50 million. This is their sales growth and their net profit margin growth. Net profit margin is what we're going to look at because that's how much they make after they pay their employees and buy the goods and so on and so forth. As you can see, it was hovering between basically 3 and 3.5% with a couple low years. And then, as you expect, there's a huge spike in 2021, up 5.9%. And that's because the supply chain was improved, but the prices hadn't fallen yet. But then we see in 2022, which is the most recent data I could find, we're back to pretty much pre-pandemic levels. The net profit margin is not crazy high. It's not continuing to go up and up and up, as this article like from CNBC would have you believe that corporate greed, they've gotten used to these higher and higher prices and higher net profit margins, when actually the net profit margin is basically back to where it was in mid 2016 to 2018. And we can actually continue to verify this because, again, the government makes all this data available. Corporate profits before tax, domestic industries, that just means industries in the United States. This is specifically retail trade. So this is how much companies are making before tax. And as you can see, when we hit the pandemic year, yeah, they start making way, way more. But then in the last 2 years, in 2021 and 2022, they've basically flatlined. So prices have gone up, but corporate profit from them really hasn't. And we can actually verify this in a third way. So this is the quarterly financial report for the US corporations. This is all manufacturing, net sales, receipts, and operating revenues. This is basically how much money they're making. And as you can see, there was a huge decline in 2020 as all the supply chain shut down, stores closed, employees were laid off. It's understandable that the money went down, and then it crept back up. And then, as you can see, around that same time frame, a huge spike in the net sales and operating revenues. And then over the past few quarters, it's pretty much gone down and leveled out. So while companies are very possibly making a few percent more on the back end, by and large, what they're having to do is they're having to spend way more money to get that. And also, that's not even really what's driving inflation. Primarily, what's driving inflation is housing, and that is causing huge issues because housing and food are basically the two things that humans need in order to survive. And so when housing goes up, it's not like people really have a choice but to just not be sheltered. So the reason that housing prices going up is twofold. One, people are unwilling to sell, and two, companies are unable to build. Often they are banned by local zoning laws. Now, for the first reason, people are unable to sell, and there's a pretty good explanation of that here. This is an interview with one of the Shark Tank people, and she says sellers don't want to move from their apartments or their homes because they don't want to take higher interest rates, she said, and buyers are too afraid to buy because they are getting less house for the price. So you've got a standoff going on. But things are changing, and then she goes on to talk about why she thinks things are changing. I'm not entirely convinced things are changing, but we'll see. And this makes sense. If I've got a smaller house at a 2 or 3% interest, my mortgage is going to be much, much lower than it would be if I had to move and buy a different house and start paying 6 to 7% interest. There's no incentive to move because my interest rate will double, making my monthly payments and total payments over the 15 or 30-year mortgage much, much higher. So when people don't want to move, basically that means there's nothing to buy. So the few houses that actually are for sale skyrocket in price because there's so little supply to a high demand. So that was the first reason. And the second reason that housing prices remain pretty high is because companies are basically not allowed to build new houses, or at least not in the amounts that would be necessary in order for the United States housing market to get affordable for most people. As you can see here, in the United States, 75% of land zoned for residential use is zoned for single family homes. So if you're a company and you want to build homes in a city that's super expensive like San Francisco, you can only build single family homes. You cannot build duplexes or triplexes. And that becomes an issue because it artificially keeps inventory very low, which keeps prices very high. If you were able to build a duplex or a triplex, it would not cost that much more than building a single family home and would offer double or triple the amount of housing. Doubling or tripling the amount of housing with each new construction would lead to a tremendous reduction in the cost of housing, but that's basically illegal because everywhere essentially in the United States is zoned for only single family homes. Think about it. If you're a developer and you want to make a lot of money, you want to build in places that are super expensive. You want to go to New York and build condos or triplexes because you can sell those for a huge profit margin because housing prices there are absolutely insane. But it's basically illegal. You're not allowed. So companies want to do this profitable thing, but they are banned from doing this profitable thing by local city councils. So then the question becomes, if it's as easy as repealing some of the zoning laws so that companies can build more affordable housing complexes to house more people, then why don't they just change the laws? And that gets into something called NIMBY, which stands for Not in My Backyard. It is a characterization of oppositions by residents to proposed infrastructure developments in their local area, as well as support for strict land use regulation. It carries the connotation that such residents only oppose the development because it's so close to them, and that they would tolerate or support it if it were built far away. The residents are often called NIMBYs, and their viewpoint is called Nimbyism. The opposite movement is called YIMBY for Yes in My Backyard. So basically, people want housing prices to go down. Something like like 71% of Americans believe that housing is too high, and 67% of Americans say they can't afford a 20% down payment. But people want housing prices to go down, but they don't want houses built in their area that would actually bring housing prices down. People who oppose more local construction in their area to bring down housing prices are worried about things like traffic, noise, property values going down, wait times in stores because there are more people shopping, and so on. And as a result, people lobby cities to keep zoning laws strict so that they don't have to deal with more neighbors. Now, don't get me wrong, I'm not suggesting we go total anarchy and get rid of all zoning laws. There are a lot of good zoning laws. We don't want, for example, your quiet neighborhood to suddenly have a rubber factory built in it with tons of noise going around the clock and horrible smells that are polluting everything. But basic economics tells us that if supply goes up, then price will come down, and more options means more competition, which means stuff on average will improve as companies try to compete with each other for your dollar, and that will alleviate a lot of crazy high prices and poor housing conditions. But not enough people with the power to change these laws are actually trying to get these laws changed. Now, as a quick final note, I see a lot of people blaming Biden for this, and I don't think that's a correctly placed anger, because, I mean, don't get me wrong, Biden is responsible for a lot of things that aren't going particularly well, but most of these zoning laws are done at a city or maybe a county level, which Biden, who is at a federal level, does not have any impact over. You could argue that he should do more to pressure local cities in order to change their zoning laws, and that is very reasonable to be upset about the fact that he hasn't. But to say that it's his fault specifically that housing has gone up so much is not actually correct. So that's why inflation is high, stays high, and keeps getting higher, specifically because housing is unaffordable because zoning laws don't allow enough houses to be built to actually house everyone. Thanks for watching.